Okay, welcome to the Financial Freedom Guy podcast, and have my increasingly good friend Tiffany Kao with us. We met several weeks ago from a mutual friend. You're a built to sell CEO,
I
business owner.
am.
So,
Mm-hmm.
do you mind if we talk about that a little bit in the show?
Yeah. Yeah,
Okay, got it.
definitely.
Got it. So let's get introductions. Like, first of all, without going too deep, we want to tell stories more than give away all the punchlines. But how would you introduce yourself?
Exactly like you said. So I would say that I am a built to sell kind of business owner. And now today I freelance and consult other business owners to help them build to sell as well.
Yeah. And it's fair to say you have an accounting expertise?
I do have an accounting expertise. I come from everything from a very financial perspective since my background is all in accounting. And so every time I look at a business, it starts with the numbers and then it kind of blossoms out from there.
Yeah. That's it's such a solid place to start. I mean, there's something about the numbers. You can see where things are at. So tell us your story. How did you start your business? And at what point did you realize that you're a build to sell business owner?
Well, so, I had a very traditional, I guess, upbringing in my professional career. I went to college for accounting. I was recruited by the Big Four. I immediately went into the Big Four as a
Mhm.
financial auditor and stayed there for a couple years, moved from Deloitte to a little bit of a smaller firm, did that for a couple more years, and just felt like I wasn't learning enough about business from auditing. Plus, nobody really likes a financial auditor.
Yeah, there's a reputation.
Yeah, and I'm usually like a friendly sort. So, it's tough because you're walking in, every time you walk into a room, it's like the conversations stop or everybody's guarded. And I was like, oh, this isn't quite what I kind of expected my career to be.
Yeah.
And so I moved into corporate accounting, which was fast paced and a lot of fun, and spent a couple years there. And that's where kind of I had like my moment where I decided to either make the leap and do something by myself or kind of stay in my career path, which was a great career path. I mean, I could have gone from where I was, which is be an accounting manager, rise up, become a controller, maybe eventually, 15 years later, become a CFO and kind of work my way up there.
Yeah.
But I've mentioned this story to you before where, I was working quite late, which again, coming from a Big Four background, working late is like a normal thing. So I wasn't
Yeah.
thinking too much of it, but I was working really late at the company, and I was essentially sitting in this cubicle by myself, filing away papers because my AP clerk on my team didn't show up for work that day. And
Mhm.
so I ended up doing that job. And I was just there just like really, really late. And I was sitting so still that like the auto lights turned off on me, right? The automatic
Mhm.
lights turned off because I was just sitting way too still. It's like 8:30, 9 p.m. at night. And I just kind of had a flash of, what do I want to do with my life? Do I want to keep doing this, or do I want to try and do something bigger? I think back in the day, the phrase was, go make an impact somewhere, right?
Yeah.
Now, I was young, so I didn't really know what impact I wanted to make. I just wanted to make a splash somewhere. And that's where that decided that, either I make the leap now, or like I said, I keep going on the way I was. And I decided to make the leap and start my own business then.
Yeah. So how'd you go about doing that? So you had this epiphany. You're there alone. It's literally you're in the dark, and
Yes.
you're like, "Is this what I want to keep doing?" And you made a decision. So how did you go from that to starting your business?
So after that, I decided that, I'm going to go see if I can figure out a business idea that'll sell.
Hmm.
And so I thought about, what is it that I know the best? Of course, it's accounting. So everybody needs accounting services. Maybe I can start there.
Yeah.
Now, the thing is, I wasn't a tax accountant. I didn't have any tax background. I was very much a corporate, financial, operational accountant.
Hmm.
So I thought, oh, I could offer like bookkeeping services, or other businesses, smaller businesses must want like a great accountant to help put together their financial reports and, help them like make decisions about their business. So that's what I'm going to go do.
Yeah.
And so I went to I went to Staples and printed out really cheaply 100 business cards
Mm.
with some logo that I took off online. And I started going to networking events after work and basically going there and trying my pitch over and over again with my business cards. And I must have gone to at least like 50 events over the course of a month. Just every time after work, when there's an event, I would go out and trade out my business card, and kept trying to see if I can get somebody interested in what I was selling. And let's just say it was quite interesting because I definitely flopped for the first few weeks. I
Yeah.
was no good at selling.
It's a big role change for making sure the debits and credits and the financials are accurate to, rubbing shoulders and finding out what's going on with people. So the first few weeks were a flop. When did you
Mhm.
start thinking that maybe you got something here?
So the last I think there was this one event I went to where I felt like I was finally hitting it. Like people's eyes registered when I said, this is what I would like to do for the business.
Hmm.
And once I started seeing that register, it kind of gave me the confidence to say, okay, I can go and just do this. Now, what I did was I promptly quit my job, which is not a great idea.
Yeah.
But I was young and I was enthusiastic, and I thought, oh, it's either all in or nothing. And so I resigned, just really based on that. I mean, I haven't even at that point purchased like my first copy of QuickBooks or anything like that. I didn't have
Yeah.
anything yet ready and set up, and I, went ahead and quit my job. But that's really what propelled me to get started.
And at that point, no, still no clients.
No clients.
Okay,
This is why I say it highly unrecommended. Don't go that way.
yeah, but they were nodding. Okay, so you feel like there's something there. Let me go all in. Yeah, yeah,
Yeah. I thought you had to I was under the impression from everything I've read and heard is that you have to make a big move or a bold move. You have to be, disruptive like that. So I made a huge leap, which, like I said, it's something that I kind of caution like newer business owners to do nowadays.
yeah. I think it's fair because normally in business things take longer reality than our imagination, no matter what, right? Even
Yeah.
if we got the right offering for the right person, it still takes some time to make a decision and get started. Always like if there's somebody who's just starting, my advice is, hey, keep your job
Mhm.
and get in and outside of work, get to that tipping point where you already have clients, you have money coming in, and
Yep.
then flip the switch because it just generally takes long. And so what was that like for you? I mean, you resign, you're all in. At what point did it start saying, okay? What point did you start to feel like, okay, you made the right decision?
8 months later when I got my first client.
8 months, yeah. That took a minute.
It did. There was so much I didn't know about business, and I certainly didn't understand how long a sales cycle could go for. I thought, oh, I have a home run. I'm selling something that everybody needs. I'm selling something that's an obvious answer to everybody's problems. This
Yeah,
should be an easy sell. I didn't consider competition. I didn't consider pricing, package, setup, service. How am I going to actually execute on a service? I didn't give it a lot of thought. So it took a few months in to realize, oh, wow, this is a lot harder than I thought. And then, of course, pounding the pavement for the next few months to try to get my first client. But yeah, it took me a solid 8 months to get my first client.
yeah. Even when a prospect signs up, it may accounting is like infrastructure, like tech support. It's deep into the nervous system of the business, so that
Yes.
it may take a few minutes to go from person A to person B, kind of stuff. So
Mm-hmm.
what I mean, in my mind, I'm starting to conjure up this view, like you're sweating, you're starting to have self doubt, right? Because we all do. Um,
Mm-hmm.
and so 8 months into it, I mean, what can you take us to that moment? Like, what were you feeling? What
Oh
were you
my
going through?
gosh. Um, Definitely, like you said, all the nerves and all the fears and all the doubt creeping in. Because, I kind of backed myself into a corner by promptly having quit my job. I didn't give myself too much of a safety net, which could be a good or bad thing. I think it depends on your personality. For me, it just made me like drive harder and get there faster,
Hmm.
and push myself to get there. But I mean, I was definitely feeling all of the um, you know, negative thoughts that you get in those situations, right? Oh my gosh, am I not good enough? Would I be able to do this? What was I thinking? Nobody's ever going to buy from me, and
Yeah,
I'm going to be like the biggest failure and laughing stock there is to everybody I know, and the entire world is going to see me for the failure that I am. So it definitely
yeah,
built up quite a big image in my head.
yeah. And at that point, okay, so you win and you want to have impact. Was 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 financial freedom part of the equation, where you're thinking about being liberated, being able to make more money, or is that not part of it?
Well, for me, it was a lot of building something of substance, right? At
Hmm.
that point, it was building something of substance, again, not being really clear as to what that was, which I learned later on how important it is to have a clear vision for what your business is going to be. I was a little bit more on the impact side of, oh, I want to work and make an impact with other people's businesses and their lives, help them grow their business. Not really thinking about how important it is for me to build my own foundation, right, in order to continue to have a sustainable business to help somebody else build theirs.
Yeah.
And so, yeah, not didn't have a lot of clarity at that time in my
Yeah.
life.
Pieces is it's a new kind of thing. Pieces are coming together. So,
Yes,
so you got client, you build things up. Where did you start
yes,
to say, well, maybe I should think about built to sell and exit? When did
yeah,
that start to come into your
yeah.
thought process?
Well, I became um, immersed in my own business. I started hiring pretty early on. I was only about a year or two in, and I decided to take on full time employees because to me, I felt
Hmm.
like for me to really build a business and a brand, I really wanted to control kind of how the work was being done. So I switched over from independent contractors to hiring full time employees.
Mm.
And about 5 years in is where I started think feeling the pressure it is where you realize you're kind of the owner operator of your business. You're not so much the owner CEO. So you're
Hmm.
working in the business. I'm training my staff. I'm delivering stuff to clients. I'm trying to sell. I'm trying to market. And I couldn't see myself getting out of my, I guess, own rat race in a sense that I built for myself from what I was doing there. And so that's when I had a moment of, I have to do something different. This cannot be the answer. And this was not what I envisioned being a business owner was.
Yeah. And you're grinding away, working, saying, wait a minute. This is not what I saw in the darkness and that office back when the lights went out, years ago, years prior. Okay,
Yeah.
so you're starting to think more that there's something more to this.
Mm-hmm.
How do you become? I'm gonna put it in my term, like the architect of the business, where
Yeah. Right.
you're leading, guiding other people. You're remarkable.
Yeah.
You're public facing with the clients. Was it something like that where you're
Mm-hmm.
starting to say that my role could be, instead of being A, it could be B, which is a bigger impact role?
Yes, yes, it is. It was really taking a step back and kind of redefining what I see myself as my role in the business ultimately. I think I organically grew the business, which I think a lot of small business owners do. You start by being a great technician in what you do,
Yeah.
and then you think you'll hire a few people to help you out, and then you're still wearing so many hats. You're not really looking at your business as a entity in itself and an asset that you can continue to build. And so I wanted to learn how to actually build that asset. And when I first started the business, I read that book, E-Myth, which
Yep.
I'm sure you probably heard
Yeah,
of it,
Michael
right?
Gerber. Yep. Uh-huh.
Yeah, Michael Gerber, E-Myth. And I read it, but didn't understand it,
Hmm.
right? So I heard the story, I understood, what he was trying to say, but I never really got it. And so about 5 years in, when I was having this like moment of reflection, I kind of remember that book. And then after revisiting that book, I also read this other book called Built to Sell. And then
Yeah.
that's what kind of, clicked everything for me in a sense of, oh, if I set up my business so that it's a sellable business, then I will automatically have all the components that I'm looking for, put myself in a position that I've always wanted, and then also have that added challenge of seeing, hey, can I actually sell the business that I just built?
Yeah.
And that for me was super exciting, was a very compelling future. And that's why I kind of went full speed in that direction.
Yeah, that's a great book because Built to Sell is a story. It's very relatable, and
Mm-hmm.
I think there's like 10 tips come out of it. John Warlow's book. I
Yes,
mean,
John Rolla. That's correct. Yeah.
very, very, so at that point, it's amazing how a few ideas at the right time. You could have read that like 8 years prior. It would have meant something different to you, but that at that moment, it's like, oh,
It's all about mindset, right? What mindset you're in and just kind of the situation for certain things to register. Like I said, E-Myth, I read it and it just didn't register with me until much later, until I was in the business for long enough and actually experiencing a lot of what he was saying. And did it actually dawn on me what he was actually saying?
yeah. I mean, you're literally describing that owner dependence where it's all
Hmm.
the hats. And I know owners that have a good sized business and they can be up to like 2 o'clock in the morning doing invoicing, right?
Right.
And that's like
Yeah.
bookkeeping, accounting level work. If anybody can outsource anything, it's bookkeeping, accounting,
Be
invoicing.
the first
You
one.
know, I
Yeah.
mean, right? I mean, it's tech support and bookkeeping, accounting. Those are foundations.
It is.
Right? If the county,
Yeah.
what have you seen like with businesses you work with? Like if the county's messed up, what have you seen? How does that impact the
Yeah.
business owner and their team members?
Yeah, yeah. So I think, the bigger impact definitely comes with owners where they have employees. And the owner, without those numbers, without those financial reports, without something that kind of keeps you honest as to what the progress is in the business and how things are actually doing, you're left with feelings, gut instincts,
Yeah.
let's, make decisions, fly by the seat of my pants. And yes, that sometimes will work out really well. And maybe you'll go on for a good, long, lucky streak where nothing blows up. But oftentimes you will hit a point where you won't be able to either grow beyond. So I see a lot of companies do this around the 5 to 7 million mark where they can't get beyond. They're trying to bump up against that 10. They can't go farther than the 10 million because they're still doing everything by just instincts and feelings versus going
Yeah.
back to concrete sets of numbers. And how that filters down and trickles down to the people they work with is, people are looking for, well, what are my expectations? What exactly am I driving at? And a great way to set expectations is to kind of give it something measurable. Well, if you're not measuring this stuff in your business, how exactly do you expect to give your team anything to measure by as well? And so that's where I see that happen quite a bit.
Yeah. I'm really impressed with people who can fly the plane that far, and literally you don't really use the windshield anyway with planes, but they don't have the instruments, they don't have the radar, so they're literally just going about, hey, what can I, line of sight, what can I see from a
Yeah.
decision making standpoint, and especially when they're starting to become some level of a management team, there's other people making decisions, and everybody's gonna have a different view of the world.
Yep.
Because
Yep.
we could be in the same room looking at the same thing, and you're going to define it based on who you are, your experience. I'm going to define it based
Right.
on who I am. So if we don't have financials, so at least we're looking at the same thing, right? I'm really impressed when people can go as far as they do without the benefit of clarity and seeing. Then on the other side, I'm thinking, wonder how much better things could be, right? If you're doing this good, you got a 5, 10, 15, $20 million business, and it's based on your really the horsepower, your intuition. How much better could things be?
I'm always thinking about how much money are you leaving on the table, right? At the end of the day, how much are you missing? And I think that part is hard for people to grasp because it's so intangible. You don't know what you're missing.
Yeah,
But for people like you and I who understand the power behind having good financials and good accounting and good decision making based on concrete numbers, you can actually measure how much you're missing if you do it right.
yeah,
This is the potential, this is the forecast of what could be. But without any of that, I think you're kind of living in the clouds a little bit, right? Trying to feel good and feel safe. Whereas, if you just took a few more minutes and really learn how to actually utilize I like to say, the information, the financial information in your business, you can go so much further.
yeah. It's pretty remarkable. And fair enough, most people are not numbers. Most business owners are not numbers people. And they're really smart, successful, and have courage to go out to that ledge like you did and jump without knowing all the how. That's really something. And they're not numbers people. So something like, the first time a normal person looks at the financials, like,
Mm-hmm.
wow, I'm not feeling smart all of a sudden. It's confusing, the terminology, the structure.
Mm-hmm.
So I think it's fair to expect that, somebody new to look at the numbers, that they're going to want to avoid it, not look at it, they got work to do and look at the numbers, will
Yeah.
slow them down kind of stuff. I think it's fair to say that let's just do it consistently. Instead of recurring meeting, recurring huddle, look at the financial like a
Yes.
scoreboard, right? When bring in your
Mm-hmm.
P&L manager so that now we can see the
Mm-hmm.
same thing. Teach them how to talk about the number story. Teach them to
Mm-hmm.
figure out where to take the action based on the number story, and all that weight. Michael Gerber's, all those hats, all the weight. Now the weight's coming. The weight is literally coming off the shoulders
Yes.
of this, the CEO. And it's it's just so accessible, right? Like hiring a good accountant, whatever, bookkeeper, lowest level, accountant,
Sure.
controller,
Yeah.
chief accounting officer, whatever the level that makes sense. Oh my God, that's such a good investment.
Well, and that's the thing. The information's already in your business. You just need to know how to extract it out the right way. I would like to say that not to knock on softwares like QuickBooks. A lot of my clients aren't QuickBooks, and it's a great piece of software, but it is only as good as the user using a piece of software. So I think people have a lot of false sense of security when they use QuickBooks, thinking that,
Yeah.
oh, QuickBooks already set up my P&L for me, my chart of accounts for me. Everything is tied in and synced in. It's so automated. And so I think because of that, they often, how would you say, hire for the lowest level, thinking that that's all that they need in order to be able to get use out of their numbers.
Yeah.
And they look at these financials, and I would argue to say that a lot of times they don't understand it, not because they don't have a financial background, they're not smart enough, but usually it's because it's not even arranged in a way that's useful and practical. It's a cookie cutter, something that came out of a system, and every business is slightly nuanced. Every business has its own measurements and KPIs they want to track. I bet you every business owners have certain things in their minds that they really want to look out for. And when you have a savvy CFO or accountant in your business who can arrange your reports in a way where all the data is useful,
Yeah.
then it opens up so many more doors.
That's a great point. I mean, you're basically saying there's no law that you have to have the report organized this way or that way, but organize it the way that's intuitive, where you look at it,
Yes.
I see where the opportunity is, where things are better than expected or less than expected, never judgment, and they take
Yes.
action. It's almost like that, on the mattress, or you have that tag, don't remove for punishment of law, you can tear it off.
Yeah. No police is gonna come knocking on your door because you decided to tear that off. And the one thing I always tell my clients too is like, do not arrange your financial reports or have it ready only for your tax accountant to use for the purposes of filing taxes, right? There's certain things we do want to keep separate, but largely your financial reports are there for you to help you manage your business, which is very different than filing for taxes. And so, again, IRS is not going to come knocking down on your door if you decide to rearrange that QuickBooks chart of accounts.
Yeah. Oh my God, the report's not it's generic, right?
Yeah.
And right,
It's not bland enough. Come on.
going to be audited since you were born. Not going to happen. And so it really is. You're putting out the managerial, intuitive, make it easy kind of thing. And then another application. What have you seen like business owners who don't have their accounting financials organized when they go to a bank or any lender, private equity, maybe friends and family will let you get by with a mess. But what does a bank do, right? When here's a scenario. Yeah, we're interested. Let us send over your financials, and then it's 3 months later before the financials get sent over.
Yep. Yeah. So that happens quite a bit. And oftentimes I hate to say it, how I get engaged with clients is because something like that happens. They've gone and they're looking for money, they're looking for lending, they're looking for funding, they're looking to sell, and they basically got kind of beat back by the market or the investment partner or the banker saying, look, I can't give you anything because your financial isn't telling me the story of your business. I don't even know what I'm lending for and lending to. And am I going to get what we're, interest and payment back, because we can't tell from your business. And I think you had touched on this a little bit earlier about how accounting is really like the universal language for business. Like, unless somebody works in your business, they're not going to know what the day-to-day is. But if you keep a good set of financials who can tell the right story, then your banker will be able to read that and understand exactly how your business is run. Your partners can read that. Your investors can read that. And certainly when you go out to sell your business, other business owners looking to buy your business wants to know what they're buying and what the day-to-day operations look like. And they can tell a lot about that from your numbers and your reports.
Yeah, you literally said, we'll come to the sell your business part, but let's say with the access to capital part, if the financials are delivered quickly, and they're accurate, a lot of times they're not accurate, right? A banker can look, the banker see lots of financials. They can look at the financials in a nanosecond, like, right?
What's this negative number, right? Like,
what's this?
How do you have negative receivables? I don't understand.
Yeah, something like that. Right, that kind of stuff. How do you communicate? Like, business owners, for all the right reasons, they're out in the marketplace, selling, delivering. They do think of the financial infrastructure as back office, secondary, and fair enough. If a person's starting their business, it's fair enough to lead the charge, knowing that you'll get certain things in place later on versus building all the infrastructure. Fair enough, right? That's how you get out there and sell and deliver. Um, what kind of response, like when you're guiding a business owner about these kinds of things, about the benefits of using the financials every month and access to capital? We'll talk about the valuation, sell side in a moment.
Hmm.
What kind of response do you normally get?
Well, it depends on the owner and really how comfortable they are with the numbers. I have clients who like cannot wait to see the numbers,
Mm.
right? And that's what they're looking for because they feel like, oh, it's so important to know, kind of track how I'm doing. But for a lot of clients, I mean, I do feel a lot of resistance because it's, what's the use of this? I have bigger things. A lot of business owners think that they can solve every business problem by chasing more revenue, right? And you and I both know that when it comes to business, it's not just the revenue. There's two sides to that equation. You have to chase revenue, but you also have to control cost, which
Yeah.
you cannot do if you're not actually tracking anything in your business. And so I think part of it is the resistance to just having to slow down long enough to
Yeah.
just use the information in the reports, because for them the urgency is let's just get more money in through the door, let's get more business through the door.
Okay, need
Now
more, get
I
more.
yeah, and that's the thing too, because sometimes it's not just and then sometimes it's really high level in a sense of they chase the revenue, but they don't always think about collections.
Yeah.
So it sounds great. You have a lot of accounts receivable. You have a lot of accrued revenue on your books, but the cash is drying up because you're not actually completing the entire cycle, which is to actually monitor your cash flow as well, which is also something really hard to monitor if you don't have good financials.
Yeah, that's brilliant. And there's, you know, uh, benchmarks are a clear indicator. If it's taking me
Yes.
100 days to collect money, but the average person in my industry is getting their money in 33 days, opportunity. So the clarity of the
Yes.
numbers, and the banks are going to look at it. Why is my business 3 times slower than the average?
Mm-hmm.
We're not even talking about the top business, but the average. So you
Yes.
using those numbers like that to really, track those key measurements, day sales outstanding kind of thing. I can't imagine running a business. I started out building businesses, and I kind of fell into the financial track. It wasn't the
Mm-hmm.
grand scheme of things, and it just because when I was running the operational side of the businesses,
Mm-hmm.
the numbers, having the numbers really helped, right? So I just kind of fell into that track. Um, I find that a lot of business owners, since they're out moving so fast, I find that they really do. They see the kind of habits you're describing as a distraction. That
Yeah,
the
distraction would
salesperson
be a
won't be
good
able to
word.
sell. The operational person won't. If you have them doing this, looking at the financials, they won't be doing what I need them to be doing, which is whatever sales, delivery kind of stuff. And I can understand that perspective, but I know it's not true.
It's anti-intuitive, right?
Yeah.
I had one client that actually told me really bluntly that they don't want their business to be strangled by a bunch of accountants looking at numbers all the time. And I was like, well, I'm not really sure what accounts you've worked with in the past, but if they're only looking at what's there in history and they're not looking at what you can do with the numbers and use the numbers for actually operational decisions,
Yeah.
then you just haven't had a good experience in the past of what a good financial support is supposed to look like. I think a lot of people, term accountants as bean counters or historical scorekeepers. I think you
Yeah.
might have heard that before too, which is only part of the equation because really good financial support providers like yourself and I not only make sure that the scorekeeping is correct, because you do need to know where you've been, but you
Hmm.
also take that information and you figure out where you're going and you use that information to propel you to where you're going.
Yeah.
Yeah,
Okay. So can I share a story with you?
of course. Yeah.
Okay. Government contractor, huge top line, like $30 million top line. In our world,
Yes.
we range kind of from the 1 million to 130 million. So 30 million is sizable, right? Only
Yes.
9% of companies make it past a million.
Mm.
Um, and this was government contracting, commercial cleaning. Okay, so that's
Okay.
in my, I'm a simple man. In my world, $30 million of cleaning, I put that into the category. That's a lot of cleaning, right? Staff, fluids, trucks, whatever,
Yeah.
healthcare, whatever goes into it. And these are some really skilled folks. They were, government contracting is very competitive. The margins are narrow, so
Mm-hmm.
they would compete, and they,
Yeah.
they would price based on what it took to win, and they would win. But then you look at the contracts, right? 80-20 analysis, like, wow, you're literally losing money on all these contracts. And you're breaking even here. Now, these are the ones that you're actually making money on. This is not an exaggeration. I know I'm from Texas. I'll tell a tall tale in a minute, but this is not. This is actually the numbers. They could have reduced the amount of work they did every year from 30 million down to 7 million.
Yeah.
The $7 million business is much different to manage, like the people, the involvement, that kind of stuff. And they were literally at 30 million. They were barely making 6 figures of household income.
Okay.
Because there's so many. Yeah, you won the contract, but you're paying the government to clean their buildings at that level because the pricing wasn't. They didn't have the numbers to do the pricing right. They were just they were competing to win. That almost like ego, that just wanted to win. And found out that they could actually reduce the amount of work from 30 million down to 7. Like, that's a lot less work in life. Okay. And increase their household income from low 6 figures to over $1 million a year of household income, and doing all that less work, and or go out and rebid the contract, do something, because these are going to sink you, and there's no way, if you're just working line of sight, you see literally hundreds of team members working every day. There's no way of seeing what's actually giving lift versus drag, unless look, here's by client, by contract, by geography, whatever it is, 80-20. Get rid of these. Either renegotiate or send them to your competitor.
Yeah. I mean, and that's what your numbers are supposed to tell you: what's making money, and better yet, what's not making money. Right. And just think about it. Like you said, they could have had a $7 million company, which probably has a lot less headaches and problems, because $30 million companies, although that sounds like a great number, has their $30 million problems. They can make less in revenue, but they can make bigger margins, which is probably why they're able to higher take home income, even though it looks like on paper, I'm only running a $7 million business. But at the end of the day, what's more important, right? The amount of money you're taking home, or how much, revenue you can shout to the world that you're making, even though, at the end of the day, your bottom line is closer to zero than you would like.
Yeah. At the very least, there's clarity, and now you have an option. And you can choose to keep working the same way, or actually make, basically 5x household income, the freedom generational levels, and work like how much you want to work. You can run that business 1 or 2 days a week if you really, if you work on the business where you have a management team. Yeah. So,
agreed.
I don't know how you do that without the numbers, and that's one big example. But there's so many like that, right? Is there a story that comes to mind where you can think where the numbers made the difference night and day?
Yeah. So, I mean, one of the things I do a lot with my clients is, we talk about service lines and kind of exactly what kind of line of businesses are you in. And so we also break that down on the financials and track the costs by service lines for that exact reason. And I had one client where, he was so sure. He was so sure that this one service line is his biggest moneymaker. Like, so sure, like absolutely sure. So we had gone over the numbers. Yeah, we have gone over numbers like at least 5 times, because he was, he wanted to prove me wrong, because he's like, there's no way that that's all we made. And so finally we go through all the details, and his biggest moneymaker service line was actually the drag of his entire business. He was making like pennies on the dollar, because of all these additional costs he didn't think about that actually went into supporting that particular line. And so after that, they had to make a decision. They eventually ended up, kind of closing out that line, transferring it to another service they were providing that was had better margins, and it made everybody happier, because, even the employees were feeling it, right? Feeling the pressure, and it just kind of uplifted the entire company and culture just from that one, just doing away with that one service line that was only existing because the CEO was so convinced that this was the main moneymaker in his entire operation. And it turned out to be just simply not true, because, our minds can trick us, right? And, that was definitely a case of that.
Yeah, that's something, right? Where he's so convinced, there's a whole belief system built around it, but the numbers say, unless you can find something wrong with the numbers, then let's make the logical conclusion. And how much like from an impact to him standpoint, what was his life like before and after?
Right. Yeah. Well, and some of it has to do with a little ego play, right? We all have
Yeah.
egos. That's how we got into business to begin with. But I think the ego is what was kind of driving that. So I mean, luckily he's a very self-aware type of person. And so
Mm.
eventually he kind of came back from that. And then, again, he himself felt better afterwards, right? I mean, you had to go through like a whole cycle of, angry denial, whatever the
Yeah.
cycles of, yeah,
Remorse, loss.
remorse,
Yeah.
grief, all of that to eventually come back and just know that at the end of the day, it's not, the business isn't about the business owner, right? The business is about the business being a good entity in itself and feeding everybody that's part of the business. So,
Yeah.
yeah.
They're doing that work. I mean, that's relief versus something, that is that why aren't things working out? Because I can't quite, but the numbers, you can see it. Okay, let's talk about another topic where
Yeah.
there might be some example. I think pricing comes up a lot because there's legacy
Mm-hmm.
pricing. Well, we started 25 years ago. We priced at $1 per unit, and in 25 years, it's still $1 per unit. I'm
Yes.
exaggerating, but there's legacy stuff, right? And we're afraid to
Yes.
go too much because then there's going to be fear.
Yep.
Um, what have you seen, like when you come to that? The pricing is a
Mm-hmm.
huge part of the equation, right? Sometimes the stroke of the
Mm-hmm.
pen, all of a sudden, right, you can breathe. You
Yeah. Yeah.
can breathe again. What have you
Mm-hmm.
seen in your
Yeah.
pricing?
Yeah. So, one of the biggest impact I would say that I've had on a company with the pricing is really showing and making a distinction between what is cost and what's G&A.
Mm-hmm.
A lot of companies I work with, they're in the services industry. I mean, I work with companies outside the service industry, but that's probably the bulk, especially around our area. Everybody's providing a service of some sort. And so labor is always their most, high dollar expense. And a lot of people kind of throw that out the door in a sense that they all put in one category of salary and wages, and then they call it a day, right? But
Mm-hmm.
if you really take a deep look as to how time is divvied out and assign dollar values to how the time is spent by each employee, then you can split out your costs from your SG&A expense.
Mm-hmm.
And if you really capture that cost truly, then you really know whether or not you're pricing properly. Now, I had a CEO who was the back of the napkin type of pricer, right? So in his head, he knew what the expenses were. And every time he bid on a contract, it was always back in a napkin, never asked accounting for any support,
Mm-hmm.
just felt like he knew all the costs. And so when we actually went through and did a deep dive and rearranged the profit and loss and kind of split out those costs in G&A, he started really seeing like some of the cost that he wasn't thinking about in his head, like burden costs, right? So with every employee, you have burden fringe benefits, like they go on PTO, or there's
Mm-hmm.
holidays, or there's benefits that you provide them, and all these little things added up, so that when we really determine what the true cost is per employee, and then assign that to each contract or project or engagement, however you want to call it, that margin, that price started looking really dismal after a while, right? And so then again, kind of like what you were saying, it comes back to clarity. It's not something that he could fix overnight, but now that he had this clarity, he could slowly figure out, well, how do I remarket or reposition ourselves to essentially be able to charge a higher dollar value? Because you're
Yeah.
right, when you're so used to charging a price, I mean, your customers, of course, are going to be unhappy if you all of a sudden raise the price on them because you're like, oh, I'm sorry, I did the math wrong.
Mm-hmm. Yeah.
That usually doesn't go over well. So it does take a bit of a process to get there. But at least once you have that clarity, now you know what you need to change, or choose not to change, but really what you need to actually pivot in your business. And without that, he could have gone on forever just charging the same price
Easily.
because he felt like, oh, that's what I had to do, and and looking in the wrong places to figure out why the business is not making money.
Yeah. And those are key. You kind of hitting the key things, right? There's pricing, there's direct costs, there's overhead, and
Mm-hmm.
then manage those things well, and then have the impact that you want to have for your clients and your team members.
Yeah.
It's a beautiful thing, and the numbers certainly help. No matter how good somebody is, the numbers are going to make them even better. And if
Yes.
they bring their team members along to use the numbers, oh my God,
Oh my
now you're
gosh,
flying. Now you're
yes.
flying.
When you start assigning P&L responsibilities to your managers and your executives, that's where you're really now building value in your business, and you're taking yourself out as the owner operator.
Yeah, fewer hats. less less stress,
That,
less
that head's feeling a lot lighter, isn't
like,
it? All of a sudden.
you might even have time and
Yeah.
energy to go do that next thing that you really care about, right?
Oh my gosh.
The bit, whatever the business vision is, that kind of thing.
The
So
mental luggage is now being offloaded.
yeah, it's something, and it's so I do believe there's 80/20 with accountants and bookkeepers and controllers. Roughly 2 out of 10 are really good. So right, so find that person who's really good, right? There's no even if there's a price premium that comes with
Hmm.
that person, that team member,
Hmm.
the skill, the judgment, the passion,
Hmm.
you're going to see the return on investment. I would be willing to put money on that. I mean, is that
Hmm.
right?
Hmm. Yeah,
I think most things
I
are
agree.
80. I grew up in a family where most people are good. I went into a world where I say, no, most people aren't. Right? They're not immoral, but they're not remarkable at what they do. So
Yeah.
be intentional. Select the 2 out of 10. Um, unless you get a huge company, there's no reason not to. And
Yeah, I would strongly agree with that. Unfortunately, I think I learned that the hard way as well when I came out of my career into like my own business and hiring people. I discovered the 80/20 rule real fast. Beforehand, I thought it was 80%. Everybody, operates on the same level, and then quickly realized, okay, so everybody has different experiences, not quite there. But I do like, work with a lot of owners now to try to help them find their team and really to be able to identify what is a good accountant or who would be a good accountant, what kind
yeah,
of what are the deliverables that you need them to hit in order to support your business. And so yeah, unfortunately it's 80/20 the other way, so
yeah.
I
I
wish
think
it wasn't.
most things has been proven time and time again that most things, your customer sourcing, your people who deliver, and relationships outside of work. So it's a good thing to know. Just once you know it, just pick the 20, right? I just picking this pool,
It's
not the other.
worthwhile. Yeah, it's
Yeah,
totally worthwhile once you get the right 22. And like you said, they may come at a little bit of a premium, but finance is just like legal support, just like like any of your trusted advisors in your business, they need to go a long way with you. So it's worth that investment so that you can go a long way in your business as well.
yeah. You literally, if you want a major return on the different levels of expertise, I think it's doable in this area that you're talking about. Okay, let's follow the dotted line now. So now, just like you're thinking about exiting and valuation, that kind of stuff. Maybe a good way to talk about it, not just your experience, but talk about how does the finance and accounting operation support that exit and
Hmm.
support the optimal valuation.
Hmm. Yeah. Well, so when we had spoken about this a little bit earlier about how your financial reports are really there to tell the story of your business, right? It's a universal language for somebody else who doesn't work day to day in your business to understand how your business operates and what's the value that they can take out of their business, take out of your business. And so if you think about it, if that is the only thing that these future buyers can look at and assess your business from the front, like in the beginning. Now, of course, there's like, even deeper due diligence and questions and everything like that afterwards. But their first impression is mostly this financial report that you're giving them. You know, of course, that's incredibly important, right? We
Yeah,
can't deny first impressions are incredibly important. So if this is what you're presenting, and everything in accounting department, finance department, they capture the data to make sure that these reports actually come out and speak the right stories. So that's why, especially if you're positioning yourself to sell, that having a good accountant, having a good finance support, CFO on your side will really help to make sure that that first impression you're putting out there is the right impression that you want.
yeah,
Now, it also is helpful too because when you're thinking about selling, you may want to decide, well, what exactly is my exit, right? What kind of dollar amount do I want to exit with? Which is what most people are thinking. And
yeah,
then from that, you can then reverse engineer, and you can reverse engineer into what your financial statements need to look like for you to hit that possible sell price.
yeah.
And no better way to measure that than looking at your financials on a consistent basis to be able to track that so you know what you're working toward, especially if you know other people, that's what they're looking at as well.
Yeah, I mean, that's brilliant, right? Where I'm gonna put it into my own language here, but
Okay.
figure out your destination, right? Where you're
Yes.
hitting freedom levels of income, and then reverse engineer, figure out the flight plan from here to there and use those
Mm-hmm.
monthly financials to track, are we to the left or the right? Are we up or down? And, right? Make it,
Exactly.
yeah.
Yes, exactly. Exactly. Yes.
And then it's doable. I've seen a few deals fall apart when the financials are not clean. You send the financials over to, it could be a third party company buying, it could be a PE backed
Mm-hmm.
company that's investing to do some kind of roll up
Yeah.
or something, whatever it is. And it's you definitely don't want to send over financials that have been engineered to look good. I mean, it's if it's not real, boy.
Well, that's very true. I think the other thing too is also the timeliness and how quickly you can get it over. I was actually, I don't remember where I heard this from. I listened to a lot of podcasts and things like that. And I was listening to like a broker also interviewing somebody who was looking to buy. And he was looking to buy an accounting company.
Mm-hmm.
And he says of the 10 accounting companies he was interested in, only one was able to actually provide him with a financial report in a reasonable period of time,
Wow.
which is shocking and says a lot about the industry. But, just think about it. Like if a buyer's like, hey, I'm ready to, I'm interested in your business. I want to buy today. And then you make them wait for 30, 45 days before you can shoot out financials. That's a terrible look.
Yeah.
I mean, would anybody want to buy something like that?
Yeah, and it's really if the financials are reviewed every month, they get real clean, right? So by the time
Yes.
there's a third party, it could be for a loan, it could be a buyer, whatever it is.
Mm-hmm.
More importantly, for management every month.
Yeah.
At that point, that's the only way to get clean financials, where there's
Mm-hmm.
review and feedback to the accountant. But there's no way the accountant knows everything operationally, where everything should be recorded. And
Mm-hmm.
so if if a company's doing it consistently, then I need sure, I'm interested in the deal. Send over the financials. Really, you should have the most recent financials. Nothing more than a click of the button, and it's off.
Yes. Yeah. I mean, except unless they've asked for an interim in the middle of the month financials, your prior month financials, year to date financials should be ready. Click a button at least 10 to 15 days after the month ends, right?
Yeah.
It shouldn't go beyond that. So if somebody's asking for that and you're like, oh, hold on 1 second, and you're in the back end scrambling, trying to get it together, that says a lot. And that sends red flag signals to the buyer of, well, how organized is this company really if they don't even care to keep track of their finances, the money
Yeah.
in your business, right?
At that point, it's real clear, and it's an accurate indication. It's not a miss. It's not like the buyer's being misinformed. No, they accurately can see your level of professionalism, and it's understandable.
Mm-hmm.
This is not the first thing that a new business owner would kind of optimize, the accounting and finance operation.
Sure.
But it definitely should be close behind, because otherwise you start making decisions and pricing when you're doing sales, and everything's getting
Mm-hmm.
leaving money on the table, kind of stuff. So
It
so
does get them
beneficial.
questioning that, right? Like, well, how exactly are you pricing if you don't have this stuff together, right? And you're right, new businesses don't necessarily need it unless they know they're selling. But also keep in mind too that if you are selling, most buyers want to see 2 to 3 years of past financials, right? So you may not be selling today, but maybe you're 2 years into your business and you want to sell in the next 3 years. You want to start getting your act together now, so that
It's time.
again, they look at the trends, they're seeing a good trend of where the company is going, not you trying to figure it out somewhere in between.
Yeah, all those are very good indicators of how effective the accounting operation is,
Yeah.
and to some extent on the business. If you look at, there's a whole bunch of money that has not been collected. It kind of tells us, well, that's the same. How we do one thing is how we do all things.
Yes, that's
And,
very true.
yeah,
Yeah,
and so it kind of rolls out. What are the
absolutely.
what are the most common mistakes that a business owner could make when they're positioning their business to
Mhm.
be acquired by somebody?
Usually they start thinking about it a little bit too late, meaning that, uh, again, not understanding that buyers want to see financials 2 to 3 years in the past. A lot of times people get this conception that, oh, if I want to go sell my business, I can go out to the market a month from now and, somebody will want to buy my business. And so when they're starting to think about selling their business, they don't quite see kind of the impact and the history of the business that also would need to be presented to the buyer. So the buyer wants to know, where were you 2, 3 years ago? Because that's an indication of where you've been. And again, like you said, it gives a lot of insight to the buyer of what kind of business owner have you been and what kind of business am I buying?
Yeah.
And that's also to say that when you start a business up, especially if you start it organically and you're growing it and you're bootstrapping and you're the one hiring everybody, it's really hard for you to be objective. And I would
Mhm.
say that that's the second mistake that a lot of owners make, is that
Mm.
they don't step outside of their business, outside themselves, and look at their business from a third party point of view. If you were the buyer, how would you see your business? And be honest with yourself, right? Take out all the blood, sweat, and tears you put into it, and really put on a different lens and look at your business from an unbiased point of view.
Yeah, those are great, right? Don't start now, right? The
Yes.
opposite of too late, and then see your business objectively, like an outsider would see it.
Yes.
That's great advice. Does anything else come to mind as mistakes that are made that could be actually done now, or is a positive
Yeah.
action?
Yes, I would say really think about how integral the owner is to the business. Business value tends to drop if you are a key piece of your business,
Hmm.
because as you would imagine, a buyer, to them to buy a business that's operating, it almost seems like they have to buy you as well in order to keep the ship running, keep the plane flying. So that typically drops the value of a business. So being able to strategically take yourself out of that position, and then also if you are part of the business and doing either the executive role, even if you are doing some sales and things like that, paying yourself enough,
Mm.
right? A lot of times business owners sit there kind of feeling really good about their bottom line, but their own salary is not even in the bottom line, or they're paying themselves very little, which doesn't make any sense because you actually have a function within your business.
Yeah.
And so that becomes a real shocker for a lot of people going out to market, because a buyer will look and they go, well, wait, so that means that if I buy your business, I would have to be you, and I'm paying myself how much in a year? That's not even enough for me to go out and hire somebody who's willing to do that job, right? And that
Yeah.
just doesn't make any sense. Yeah, and I would say also kind of the same line of thought is expenses. A lot of owners kind of end up constricting how they spend, because they think that, oh, this will make my bottom line look better, right? So I'm going to spend a little bit less on marketing. I'm going to spend a little bit less. I'm going to hire the cheapest bookkeeper out there, things like that they start constricting because they feel like the back office isn't necessary and as necessary or as impactful, and they'll actually go straight to the bottom line so they have a bigger net income, and that'll look great for the buyer. But honestly, when a buyer comes in, they want to see a business that's sustainable, and
Yep.
having marketing, having sales departments, having accounting department, having good financial support. This is all
Mhm.
part of a sustainable business. So when they pull back on that and they see not enough expenses going into those kind of functions, it really makes a buyer question, how good of a business am I buying?
Yep. At the very least, we're going to model it out as if doing a step up in capability. Uh,
Yes.
what would the business do in that case? Um, Really something. And talk to us more. Okay, you sold your accounting business, and now
Hmm.
you're focused on this, right? Helping
Yes.
helping businesses prepare for the going to market. Is that?
You,
Hey,
you
can,
got
can
it.
you tell us a little bit about that?
Yeah, yeah. So I think a lot of it also stems from having gone through the transaction myself, and knowing what all that feels like and all the steps that are involved, and also positioning my business to sell. So I want to work with other business owners who are about 1 to 3 years out from selling, where they're really interested in figuring out how to position their company to sell, because
Hmm.
selling is not a quick endeavor usually. But if they're ready to know what levers to push, how to track their own progress and kind of get to that end goal. That's the type of engagements that I work with now. And
Yeah.
of course, a lot of it is all financially driven. So that, we really get to see with a lot of clarity, where's the business today? And then we have a very specific goal in the near future with a defined timeline of where we want the business to get to. And so once you know that, then I can work with the owner and kind of figure out, okay, what knobs we need to turn in the business and start progressing toward that, so that they'll be ready to sell when the time comes.
Yeah. And I'm gonna add to that. It's important that they have something to go to, that they're
Mm-hmm.
excited
Yeah.
about, they're passionate about something in their life, that second mountain where it's really a purpose.
Oh, that's a good way of putting it. Yeah, the second mountain.
Yeah. Otherwise, no matter how good the deal is, they're not going. If their identity is tied up in the business,
Yeah.
the void that's left when they imagine that the void that's there when they sell their business, which is true. If you don't have that second thing to go to,
Mm-hmm.
so
Yes.
So everything you're saying, like as a person, where does this fit? Starting early, it you know, the best time to start planning the succession is like day two of the business, right? Because why?
Right now.
Right now. Sorry, that's a good way to put it.
Yeah.
Um,
Yeah.
it doesn't mean that everything has to be. If it's 5 years out, it doesn't mean everything has to be perfectly worked out. But at
Hmm.
least you know that the key things to do now, like
Hmm.
to be in the right zone at that time versus trying to do a clean up job and when there's a buyer knocking at the door, um, probably that deal's going to fall through.
Yeah, I mean, I always, to me, in my mind, I always compare to starting a business to like an artist, like approaching like a blank canvas. You know,
Yeah,
it's a blank canvas. You can make it whatever you want it to be, but it's important for you to know what you want it to be.
yeah,
Otherwise, you don't know what colors to fill in. You don't know, what strokes you want to do. You just don't know a lot of it, and your final picture is not going to turn out exactly how you envisioned it. So it takes a lot of consideration and thoughtfulness and strategy to get there. But it starts with the clarity of that picture. What does that end picture look like for you?
yeah,
So
yeah.
yeah,
Start with the end in mind, and
start with the end in mind. Yes,
yeah,
that is that's my motto. Start with the end in mind.
yeah, destination. So with that, let's come in for a landing. What is the
Mm-hmm.
best way for people to get hold of you?
Yes. So LinkedIn is always a great place to connect with me. So Tiffany Kao on LinkedIn. And then, of course, you can always get me by email, which is tiffany.kao@aug88solutions.com. And yeah, always available for questions and consult.
That's fantastic. And for what it's worth, I mean, I know Tiffany to be a quality person. So if you're thinking about this, it's worth at least having a conversation just to, explore what's below the surface as far as,
Hmm.
opportunity to do better together. So for the audience out there, thank you for your time and attention. The
Yes.
Accounting Foundation, using the numbers to get your destination. We call that growth CFO work, and the accounting is the foundation for that, which is a different expertise. Um,
Mm-hmm.
really can't be understated. Not having that person on your team guiding, the business owner and their
Yeah.
management team to that destination. Maybe you get there, but maybe you don't. And 72% of businesses are not sellable. They will
Mm.
sunset, meaning close. And
Mm-hmm.
it's kind of versus having a legacy where something goes on and you get the second payday. Um, so I'm going to encourage people to definitely have a conversation, to at least go a level deeper, find out the
Yeah.
benefits of doing things now, um,
Mm-hmm.
and the return on investment. I can't think of very few times in my professional 30-year journey have I seen this type of investment not pay off. Very few times.
Right.
I mean, it does
Yeah.
happen, but it's rare. So
Yeah. I think you're leaving a little too much to luck. Luck is helpful, but you don't want to leave all of it to luck.
yeah, that's great. So Tiffany, thank you for joining me and getting the story out.
Yeah, thank you for having me. This been fun.
Great. I'm glad. I look forward to our next conversation.
Yeah, same here.
All right. So with that, adios.
Bye.